Okay, welcome, guys. Um, welcome to tonight's lecture. And from our last class, we'll just pick up from there. Just a brief reminder that in our last class, I taught us about time. Okay, I taught us about time, where and I also taught us about timing in MBM. We are still on MBM, market business model, and for those of you who have been following up on the class, I think we are now at that point whereby we are at a, I mean, this next series of teaching of lectures is when we'll now start identifying some actions and trying to understand price delivery. So this next series of lecture would help us know what price wants to do. And this will be the last section. Okay. So this section will teach us how we can know what the next candle would do, what the next, where price is going to next, where price would go to before it go another place. All these things we'll know. Where is the most important place to enter, exit, and all those things. Okay, it's going to be in series of teachings as the previous lectures have been. Also, so there's we're going to take it slow. There's no need to be in a hurry. In our last class, I was able to teach us about timing, and I said we use time as reference, not a criteria for making decisions. We use it for reference in MBM. Okay, so if you missed that class, you can go back to the MBM 018 to watch it and understand the sessions. Spoke about session. I spoke about how the monthly candle and the weekly candle can sometimes differ. A lot of things. Okay. Now, in this class will introduce us to, or let me just say, this class will introduce us to the ability to know what market wants to do next. Okay, that's why you see that my board is blank. I've deleted everything we've done before. Now we're gonna start on a new note. Um, I've been able to teach us about price using candlestick, and I said the reason why we use candlestick when explaining price is because of candlestick is what helps us to organize price. Without the candlestick, we might not have some information. We of course we can use some other chart, but the one that is most popular is the candlestick. And if I explain to you with the candlestick, you can easily go to the line chart, the bar charts, and other type of charts and replicate what I have explained to you. Told us that the candlestick helps us to identify price because it is what organized price for us. It consists of four different price points: opening price, the opening price, the high price, the low price, and finally the close price. I said the opening price would always be the first, then the high and the low price can be created at any time, and then the close price would always be the last in any candle, daily, weekly, hourly, minute, whatever. Now, you see, the issue now is that before we proceed, I want you to understand something that you see, as an MBM trader, you are not a pattern trader. Please listen. You are not a pattern trader. You are a fundamental, you're trading the market system, the market fundamental. Just that, because you don't have access to so much fundamental, sophisticated informations, the information you have is this: price. And you see, the thing about price is that either sentimental analysis, fundamental analysis, technical analysis, on-chain analysis, whatever type of analysis, you still have to reference price. Either you're using bar chart, line chart, Henkin Hashi, you still have to reference price. Okay? Everything in this market revolve around price. The bidders are bidding at a price. The askers are asking at a price. Liquidity comes into the market at a price. Volume deliver from one price to another. Volatility skyrockets and still stop at a particular price. When there is war, it causes some certain commodity to move to a certain price. When the economy is doing very well, commodities move to another price. NFP price moves, CPI price moves, FOMC price moves. If there whatever is happening, Israel and Gaza are fighting, it will still cause price to move. At the end of the day, everything still comes back to price. So as an MBM trader, you're not trading patterns. You're trading the logical reasoning behind price, the context behind price. This is why if I unbox my let me bring on a candle now, and I ask you to explain what's happened in this chart. You will based on what I've taught you, you will say price opened here based on this candlestick, just this singular candlestick rather. You say this candle opened here at certain price and then went up to create a high at this price, created a low at this price, and finally closed at this price. Now, this is just a framework presentation of what this candle have done. What you have just shown me is what you have just said now is just what everybody can see. But now let's talk about the one that everybody cannot see. What actually happened in this class? And sorry, in this candle. Then that's when you will now tell me that okay, when price opened, it came down. That means askers were were in control, they were in charge, and as they were doing those things, they were placing limit orders above. And by the time they finished placing their limit orders, the bidders came into, the bidders took charge. And what the bidders now do is that they started aggressively matching the orders that the askers have placed. Now, the funny thing is that the askers could actually place those orders inside, inside this week or in the region of this week. So the orders that the bidders were filling in that caused this price to create this week could actually be on this previous candle. You get, but most times it's usually at the week. Okay, so what you will explain to me is that askers created liquidity, and then the bidders, they created liquidity by placing limit orders at prices. Then the bidders came into the market and started buying aggressively into the liquidity of the askers. They bought all the way to the stop. By the time they got to this spot, the bidders on their quest to why they were buying aggressively. Remember, I told you that what is cheap to you might be expensive to someone, what is expensive to you might be cheap to someone. So while some bidders were buying aggressively and at the market order up to this point, some bidder feels like those price points were not okay with them and they were filling in limit orders below. And that was what happened, that the sellers, when price got here, the askers got tired of selling, and they started tearing into the liquidity that we provided by the bidders until price closed here. Now, this is something that is not shown to us in this candle, but because we understand it. So if I ask you now that, what do you think would was the point? If I ask you now that, can you explain this next candle? The same context you used to explain, because what happened in this candle is what happened in every single candle. Now we have not even gone into complex technical analysis with you guys, and you're already understanding what is inside the candle, and that makes sense. If you want to break this candle more down, and I tell you that okay, explain more, and then you now have to demarcate this candle, go to lower time frame, look for when did this candle open, look for the way it's up, it's played out and everything, and start explaining each candle for me. This is a daily candle. So if I ask you to explain more on this particular candle, you can actually explain more. You go to the daily time frame, you now tell me that okay, oh, you see this open here is Asian session, because that's when Asian session opened. You see this low here, it was New York close. I'm sorry, this oak close here was New York close. You see this old fall here happens to also time. This high here happens to also session at so also time. You start explaining a lot of things for me. A lot of things. And you will be correct. But you see, the knowledge you have so far is just the knowledge of knowing and understanding. Okay, you know them, you understand them. Now, you need to combine both your knowledge of what you have known and understand so that you can start predicting. You see, when you know something and you understand it very well, you can literally guess what it's like most likely to do. Example, let's say for those of you who are married, you know you've been with your partner for a while. So you know your partner and you understand your partner. You know that there are some things that your partner likes and there are some things she doesn't like, the partner doesn't like. So let's say in a scenario something happened, you can be able to guess, okay, and predict and know that okay, this is how your partner would react to it. For example, if your partner does not like peanuts, and maybe at a particular eatery, peanut was put into the food for the partner, for your partner, you can guess and predict that she will start reacting, he or she will start reacting. You get? And because of now that you know what would happen, you can avert that situation if you can easily get something that can help her. For those of you who probably your partner have asthma, you know that in a smoky area or a dusty area, you know that it's not safe for the partner. So what do? You make sure that you go with the inhaler. So because you know and you understand, you can predict. And since you can predict, you know how to engage your partner and take charge of the situation. That is the same, that's where we are going to now. Now we have known what happens in every candle. Now we have known that there is nothing like trend. You know, I mean, a lot of people were speaking about the idea of, I mean, chat with Max, what do you mean by price, not trend? Why is it every time you are saying, I mean, why are you against trend so much? Why every time price, price, price? But this is a downtrend. This is a downtrend. My brother, let me not lie to you. This it's not a downtrend. You want me to explain it to you? Let's go forward. Let's go forward a little bit. You see, from this high here to this low, let's put this whole move here into perspective. This is not a downtrend. This is price depreciating. Askers being in full control. Askers buying aggressively into the liquidity of the bidders. Because the moment you see it as a trend, it removes all the information you need to prosper by this trend. Because is this not a bullish trend? This is a bullish trend. If you go to lower time frame, even on this time frame, this is a bullish trend. This is another bullish trend up here. Okay, so you see a bullish trend, price dropped, a bullish trend, price dropped, another bullish trend, price dropped, and you keep on confusing yourself like that. At the end of the day, those bullish trend, you would assume that okay, price is ready to reverse, unfortunately it will not reverse, you take your loss. That's wrong. Let me show you something, guys. Now, if I ask you a question, what kind of trend is this? You say a downtrend, right? A sell trend, meaning askers were in control. A sell trend. Good. Now, if I let's proceed. I want to trigger you. I want to trigger your curiosity a little bit. Okay. Now, I'm gonna switch off all the bullish candle now. I'm gonna switch off all the bullish candle. I'm gonna remove all the bullish candle in that sell trend. Now, if I ask you again, what kind of trend is this? What would you say? A bearish trend, right? A sell trend. Good. Which means that I mean I've removed all the bullish candle, but you can still tell that it's a bearish trend, right? Good. Now, this means that all the loss you made during this down move here, they were stupid loss. Yes. In fact, some of you will not even make a dime because you'll be thinking that, oh, the trend is about to reverse. Oh, the trend is about to reverse. In essence, every single candlestick from that up down to this move here, it's a downtrend. Because a candle is bullish does not make it a bullish candle. I've told you guys that. There are things we look at. It's not every bullish candle that's sponsored by sellers. Now let's do another thing. Let me remove all the bearish trend, all the sell candles. Now I've removed all the sell candles. If I ask you what kind of trend is this, you can still tell me it's a sell trend. Why? Now notice something. You can still tell me it's a sell trend. But why? I mean, at the first time I removed the bullish candle, now I remove the bearish candle, but you can still tell it is a sell trend. Why? Now, is it by candles? No, it's not by candle. That means I can actually cover all the candles from, you see all this candle here? Sorry. Sorry, guys. Let me do something. You see all this candle here? Imagine I cover all of them. Imagine I covered all of them. I don't know if there's a way I can cover all these candles so that they don't appear. Okay, let me do something. These candles are white. Then I'm gonna make this thing pure white. Good. Now look at these guys. And then all I'm showing you now is, you see this last candle and this candle. Sorry, let me delete that. Let me make it more interesting. Let me just this last candle. Now let me ask you guys, if all I show you is just this first candle here and this last candle, and then I ask you what kind of trend is that, you will tell me it's a sell trend. Why? Because this candle here is lower than this one here. See guys, let me tell you the truth, it is price, it is not candle. You follow price, it is price that dictates. So the moment you are following trend, you are wrong, because inside this sell trend there are many bullish trend, many bullish trend. Let me remove all these things so that we don't confuse ourselves. So what we follow is price. This line here, this thing here, that's what we follow, not structure or whatever. We don't even use those things in MBM. Because if I bring this portion, let me just bring this small portion. You see this last small portion. Let me bring it out and let's go to lower time frame and see how massive that bullish move is gonna be. Just which you know this thing this I don't know what's wrong with the network, but hopefully it answers me because I don't have time to waste. So what I'm just trying to tell you guys is that we don't do trend, we follow price. Trend follows price. Price don't follow trend. Those things you call trend, they just Now look at this bullish moves, all those bullish candle. Some of you would have blown your account, you would have lost all your money in that in those moves. No, I don't know what's wrong with the network. Hopefully it's gonna back. Hold on. Anyways, so that we won't while whatever is happening is happening, it's happened and moving. I don't know what's wrong. So can you imagine? I'm not gonna edit this part out. I'm just gonna leave it here so that you guys will see the kind of stress someone goes through just to make all these videos, and the kind of trouble that you have to go through just to let you guys know that it's not easy. It's not easy at all, and it's draining. Anyways, let's see if we can get back to where we were. Just hope that if you're a trader in Nigeria, just make sure you have all the network. Anyways, so on the daily time frame, I picked a portion out and I said, let's go to 15 minutes to see that portion. Now, if I ask you guys, what kind of trend is it? You say it's a bullish trend. If I remove the bearish and the both the bearish and they will tell you the reason why it's bullish is because it's going up. Nah, that's wrong. Remember all the bearish and the bullish candle, it will still be bullish move. And some of you think this is a reversal. Meanwhile, the main move is still selling. So how do we understand all this things so that we don't become losers at the hand of the market? That's what the market business model is here to teach you. Market business model is here to expose you to those things. It's here to help you understand a lot of things. As a trader, your job is to please pay attention and follow as I'm explaining all these things to you. Now let's proceed. Now, you see, I'm gonna have to remove this. You see, let's start from low. Let's build. Now we are going into teaching properly. You see, from here on upward. See, if you have not been paying attention before, please pay attention. See, because everything I'm going to teach here, if you misunderstand them, or you lack understanding of them, or you do not get the full understanding of them, you will suffer. See, it's as if you have shovel at the front in your hand, and there is gold in front of you. And all you just need to do is use shovel to pack this gold and put into your bag. But because you don't know the use of shovel, you might even know it's a shovel, but you don't understand how to efficiently use it. You die as a poor person. So whatever I'm going to teach you right now, dear trader, please, please listen, pay attention, so that you not become the trader who, despite having the key to the market, keeps on reciprocating failure. Please, this part is very important and very, because this is the part where you'll be taught a lot of things. You'll be taught entry, you'll be taught exit, you'll be taught delivery, you'll be taught expectation, prediction, a lot of things you'll be taught. It's very, and this is the most dangerous part of trading. All those ones I've taught you, all those ones I've shown you before, those ones are not, that's knowledge. But here is action. What I've taught you before is knowledge. Now I am showing you how to you convert those knowledge into action. Please pay attention. Very important. Don't want to be you don't want to be a trader that despite everything still remains at the you see those people that all of you learned MBM together, they are doing well, but you remain on the same spot because you refuse to pay attention or you know how to skip videos. So let's start from the lowest and build our understanding to the highest. Now, let's start from the lowest. The lowest is transaction. The lowest form of price is transaction, right? But since we cannot see transactions that happen in the market, the only thing we can see is the result of these transactions, which are what? Price. So let's start from understanding price. And we cannot understand price without time frame. Okay? So let's pick a daily time frame. So this here is the beginning of a new day. This year is the end of that day. Now, one of the things you will know is that this day will definitely start by a certain time, probably 23 o'clock, whatever time zone you are in, whatever time zone you start. Here in Nigeria, it starts by 23 o'clock. Now, and that means we are in Asian session, right? Now, we can know that before this day close, we can tell, you see, in MBM, we use what has happened to understand what will happen. We don't try to predict. Because in market business model, we don't believe in repeated patterns. We believe that price is continuous, not repeated. The reason why, let's say, for example, price is at this level, and then price left this level to come down here. You see, whatever will make price come back to this level here, guys, it is not because of there is a particular pattern that makes it to come back up. No. Consequence or result is what you see, but the reason for result might differ. Result would always be the same, but the reason for the result will be differ. The reason why price would go up here, it will be definitely different from the reason why, let's say, for example, at a particular point here, it went up. Now it's going up again. No, it's not because of the same reason here that it's going up here. Let me use a very good example. If, unfortunately, God forbid, but unfortunately, let's imagine the president of US, unfortunately, maybe something happened and, he got assassinated. Yeah. What will happen to the dollar? It will start crashing, right? So the reason for the crash is because of the bad news that happened to the president. But the result is that dollar started crashing. Let's look at another thing. Let's imagine that the industries in this same United States, some large industry caught fire and thousands of them got burned. What will happen to the dollar? It will start selling. It's the same result, right? But different reason. The first reason was the president. This second reason was industrial. Let's imagine now that mortgage crashed. Definitely the dollar would also crash. Three different reasons, but the same result. So in the market business model, we don't trade patterns because we believe that logic is endless. So price would give you reasons to sell. The reason it will give you to sell now might be different from the reason it gave you before to sell. Although there will be a body of knowledge that guides you to understanding that reasoning, but it is not the same thing. So the same sell you will have, but different reason. I hope you get what I'm saying. So we don't trade pattern. We don't try to predict. We only follow what market has given to. So we believe price is continuous. The fact that price came back to a certain level does not mean that it's coming back there to retest, retouch, redo something. No, price is just moving on its own based on transaction. You get what I'm saying? Good. So there are some things we can tell about this day First, we know that there will be 3 sessions: Asia, London, and New York. The second thing we know is that today opened, the day is going to close when? In New York. The third thing we know is that we know every session open and every session close. Another thing we know is that if you are on a time frame, let's say you are on the 1 minute, 1 hourly time frame, 1 hour time frame, we know that we are expecting 24 candles. If you're on the 8-hour time frame, you know that you're expecting 3 candles. If you're on the 4-hour, you're expecting 6 candles to print before the close of these days. These expectations are constant. They will always happen. These are not things that are bound, that might happen. The only reason why they will not happen are maybe twice or 3 times in a year during holidays, trading holiday, where some of them might not happen, but not all of them. You get what I'm saying? Another thing, you know, that so there are a lot of things about this market that you can write down and make them to become constant. So if you are trading 15 minutes, do the math. How many candles of 15 minutes are going to print in a day? I hope you get what I'm saying now. So these are the things that we already know. These are the things that we already know. Another thing that we already know is, you know, these are the things that are constant. Constant. They will always happen. They will happen in this day. So let's mark it. Let's mark this session as Asian. Let's mark this from this portion here as New York, as London, and then this portion here as what? As what's it called now? As as you know, Asian, London, New York. I hope you get what I'm saying. Don't mind the drawing. I'm just trying to teach you something. So now we know that these 3 things will happen. Now let's imagine we're on 1 hour time frame. So our expectation is is 24 candles, right? What other thing is there? Now, these are the things we have about this, what is to happen in the day. But another thing we also have is what has happened before. So let's imagine this is Tuesday or Monday. Okay, guys, we are on the daily time frame. From here to here is the daily candle, a daily time frame. So let's imagine today is Monday. Before Monday, what comes? Remember, the market open 5 hours and 5 days a week. So Monday to Friday, Monday to Friday. So this is Monday. What do you think this previous day will be? Friday, exactly. So this previous day will be Friday. So we are referencing 2 candles. Now, everything that happened on Friday has happened. What will happen on Monday is yet to happen. But despite the fact that it is yet to happen, we already know what would be, not what will happen, what we would expect. Session based on sessions, based on candles, based on sessional open, sessional close. Time. Remember I said we use time for reference. So it's easy to know time than to know price, because price is decision based. Time is reference based. So can you tell me when Asian open and close? Yes. Can you tell me when Asian and London open and overlap? Yes. Can you tell me when London open and close? Yes. Can you tell me when it overlap? Yes. Can you tell me when when the day open? Yes. Can you tell me which session what time is going to close? Yes. Can you tell me how many candle is going to be in the day? Yes, because candle is also time. There are a lot of things that but when I ask you, can you tell me what price? Now, you see the difference. This is how you guys get scammed. A lot of you. Somebody will come and will say, I'm expecting gold price to be bullish. What that person have done is just giving you a trend-based time. A fool can say gold will be bullish, and in 3 months, 3 years' time, gold will eventually be bullish, and he will come back and tell you, did I not tell you? Time is, don't let all these young boys use time as something. They make it look as if it's something they are performing magic in front of the chart. No, they don't know. Time is something anybody, if you're an MBM trader, you can tell that, no, you can tell that I'm expecting gold price to be bullish, and it will be bullish. It will be bullish because you have only spoken in time. You get? So when I ask you anything related to time, it's easy to know. It's not difficult. But let me now ask you. Shebi, we know when the daily opened, the day opened at Asian session at certain price. Let's imagine it opened at $10. Now, if I ask you, what price will the day close? Nobody can answer that. Why? Because you don't know. You see why price is a big deal. If I tell you what time will the day close, you can tell me 23 or 22:59. Or yeah, tell me at what price will it close. That's where the problem is. When will the high of the day be made? Nobody knows. Because high and low, they are both price. So you don't know if it will be made in Nation, London, or New York. So you can know the opening of the day, because I mean that's when new day starts. So the new day starts by $10 at $10 price. But you can never know the high, the low, and the close price. Nobody can know that. Nobody can know that. So when they tell you, I'm expecting GBP USD to be bullish, ask them to give more context to their explanation. If they cannot do that, then they're just clowns. Don't let some of you have fallen into the prey of, people who claim to know direction. Everybody can know direction. Direction is not difficult. I mean, after all, is this not a bullish trend? So what is there? Imagine price. Imagine prices. Let's imagine price is currently at this low here, and then somebody told you that I'm expecting the price of AUD USD to sell, or I'm expecting AUD USD to sell more, and then you see what happened after that call. AUD USD went up. On the lower time frame, was that's bullish trend. Those of you who would be following their call, thinking, yes, they are right, you keep on selling and keep on selling on the lower time frame, and you keep on losing until you blow your account following the wrong signal. Another person can tell you, oh, I'm expecting AUD USD to be bullish, to buy, and he will call it here. And then when AUD USD come here, it goes up, 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 and they will tell you, oh, this is bullish move. Guys, you are smart now. You're an MBM trader. Don't let those cheap tricks wow you. Okay? An MBM trader, there are some things that don't, if there is no level, there's a certain level that you don't just, there's some things you don't wow you, because I mean, this is what anybody can do. Okay? Now, when you see someone who can call price for what, they can tell you what price, with precision, now that's someone you respect. Somebody who just come here, show you about jargons and way with your money. Anyways, let's proceed, Jerry. We are building understanding. Now, what we have is just what time, based on time, what will happen, right? But, and today is Monday. This day here is Monday. This day here is Friday. Now, there is a but. You see, on Friday, we have every single information, because Friday has happened. So from the opening of Friday to the close of Friday, we know the opening price, we know the close price, we know the high price, we know the low price, we know the volume, we know the liquidity, we know where everything in this Friday is due. We know everything about it. We are yet to know what will happen on Monday, but we know everything about Friday. Yeah, good. So as an MBM trader, what we don't know, we don't assume that we know. It is what we know that we use to predict. So what we know is what? Friday price action. So and what will happen today. So that's what we will now use to make money. I hope you get what I'm saying. So what has happened on Friday is what we will use to make money on Monday. And it's not only Friday, oh, sometimes it will be Thursday, sometimes it will be previous week, previous month. The point is that previous price action, previous candlestick formation, previous price action is the information we have to know what will happen in this present price action. I hope you get what I'm saying. Let's proceed. Now, whew, now let's go down to teaching. Now I'm going to teach you You see, everything I have taught you so far, we are now going to bring them into technical understanding. Everything I've taught you, remember, as an MBM trader, you are not trading technical analysis, you are trading fundamental analysis technically. We don't have access to fundamental. So whatever we are doing, we are not trading pattern, or because a candle is this one, a candle is down. That's not why we are trading. No, we are trading fundamental. So this technical is what have given us what is happening fundamentally, and we reference them. Okay. So now the first thing we have in a day would be the opening of that day. So I'm going to put a line that represents the daily open. This is the opening of that day. So this day opened at this price, at this portion here. So I don't know. Let's just not give it the prices, but this is the daily opening price. You see, when I was teaching you guys transaction, I said both for a transaction to happen, both bidders and askers must agree at a price. Yeah, good. Now you see the opening of the day is what we call, in MBM we call it equilibrium price. Equilibrium price. Hold on, let me do that. We refer to it as equilibrium price. Now, why? Because this is the price that both, this is the point of dealing for both the buyers and the sellers. At this price at the daily open, market can go up or it can come down. Now, please, what I am teaching you, I'm just using a daily candle as reference. This thing can happen on any candle. In fact, let's cancel it. This is any candle. This is no more a daily candle. This is any candle. Guys, okay? So, open. So I'll just call it open. I will not call it daily open. This is just what? Any candle. Now, every single candle open is equilibrium price. Every candle, bullish or bearish, the opening price of every candle is the dealing price. That is where both bid and askers are looking for who's going to be in control. Where they will go, we don't know, but we know that this is their dealing price. Now, since we know that this is the dealing price for both bidders and askers, and this price is equilibrium price, means that's the price where everything is at 0,000. It's like you go to the market and they are telling you, okay, to pay $20 for something. That is the opening price for that commodity. At that price, that is the amount the seller wants. Now, this is the point of negotiation, or we call it the negotiating price. Another name for opening price in MBM is refers to as negotiating price. Now, from the open, price can go high, it can go low. So let's imagine this candle price opened and then it started going down. Now, because it is going down does not mean it is sellers are in control. Remember what I taught us about liquidity pairing. They were selling, creating liquidities, and then bidders come into like that. Okay, so I'm just gonna make this to look a little bit interesting. So from the opening price opened and then came down. Let's imagine they got to this spot, then the bidders got into the market and they bought. Then when they got here, there was exhaustion, and then price closed at this point. Now, this is typically, I'm going to what happened in a daily candle. I'm sorry, in any candle. Price opens at negotiating price. Sellers quote their price. Bidders buy into those price. They buy. And then when they got into this portion, the price that have been quoted by bidders at different level in form of liquidity, sellers match those things. Match MATCH. Match those orders. Finally, price close. Now let's explain each price. What does it mean? Opening price, I've explained to you, is negotiating price. Low price, that is the lowest price for both buyers and sellers can go in that time frame. Highest price, that's the highest price both buyers, bidders and askers can go in that time frame. Closing price does not have any meaning. Now, this is the thing. Many people will tell you, and that's when they say they are done. No, it's a lie. If you hear anybody tell you close price is when buyers and sellers say they are done, it's a lie. Oh. This close price is because of the time frame. It is the opening price and the closing price is determined by the time frame. The high price and the low price, the low price and the high price is determined by by orders, market participants, the bidders and the askers. So the opening price is not in the control of both bidders and askers. Same thing for the close price. The only thing that they have control of is high price and low price. Let me explain to you. Let's imagine you go to the market and you want to buy something, and then the seller tells you that this thing, let's imagine you want to buy a wristwatch and you were told that this watch costs $40. Do you know that $40 that seller is giving to you would be the opening price? Why? Because that is the price based on the time frame. If you come back a month later and economic activities have made the price of that watch to go up, the sellers will quote another price for you. And every time you keep on quoting new price, that is the opening price. They keep on giving you opening price. Then you now say, oh, I'm sorry, I cannot buy at that price. Can I pay $350? That is the negotiation that happens at that point. So at that opening price is the negotiation or equilibrium price. At that price, if you give that money to the sellers, he is okay. At that price, if you can afford it, you can pay that amount. That's why it's called equilibrium price. But sellers, remember, buyers always want to buy cheap. So negotiation would always come in. And seller always wants to sell high. So once a market open, I see market starts coming down like this, and you see price starts selling, just know that sellers are quoting their price, creating liquidity above. And then buyers, when they got to a point, they buy into those price. When it got to a portion to selling to those price. Now, the close is because of, the closing price is because of that time frame is closed. So if you are on 1 hour time frame, the moment 1 hour is complete, even if it is at this point here, that 1 hour complete, this portion will become the close price. I hope you get what I'm saying now. Yeah. So close price is determined by what? By time. The opening price too is determined by time. Only high and low that the buyers and sellers are in charge of. So equilibrium price is the opening price in any candle is the equilibrium price, point of negotiation. Now, how does this information help us? You see, it helps us that in such a way that, you see this candle information that we have now, we can use it to determine what will happen in the next candle. How do I mean? You see, since every candle close, whatever this candle close will be the price where the next candle will close. That means this next candle that will open here, sorry, let me use the same thing I've been using. Let's say this time frame, this is 1 hour time frame, this is also another 1 hour time frame. Okay, now price open here, right? And then came down. Now let's stop there. Let me stop there. Now the question is, how do you know? In fact, before it came down, let me delete it. The only thing we have as information, let's imagine the only thing we have as information is just that price opened here. Now, how do we know if it's going up or it will come down? How do we know? And this is where um, you see there are three things that will most probably happen. I'm sorry, four things that will happen in this next candle. Is that price goes up a little bit and continue. Sorry, is that price goes up a little bit before dropping. That's one. Or price goes up a lot, which is two. Or price comes down a lot, which is three. Or price comes down a little bit and goes up, which is four. Or price just come down a little bit, go up a little bit, does not clear those high, which is five. Price come down to clear this, go up to, which is six. There are a lot of possibilities that can happen. Sorry, I said four possibilities. There are a lot of possibilities that can happen. It could play out in any way. That's why I said in MBM, we don't follow patterns. We don't. We don't. Please, we don't follow patterns. We don't do that. Because you don't know how this candle is going to behave. You might think it's going to sell, sell, sell. Meanwhile, it is just a sponsored move by the askers, offering price region to the bidders, and before you know, you have sold, and then price will give you loss. Or you think it will come up here and start selling. No, that's wrong. So how do we know where it wants to go to? When we get into more advanced, of course, we are progressing, yeah. So we'll get into how do we know exactly what it will do? Out of the numerous results that this next candle can give, how do we know the one that how do we know what it will do? That's why MBM is here. We are not running after our shadow, or we are not faster than our shadow. Let's take it little by little. Now, the same thing that's happened here is what will happen here. But then, the difference between this candle and this candle is that we have information about this candle. So, you see this high here, previous candle high. You see this low here? It becomes what? Previous candle low. You see the opening of this candle? It becomes previous candle open. Now, pay attention. That means that if we add before, all we had on this candle, all we had was opening, high, low, and close. That's what we have. But on this candle, we have more than that. On this candle now, we have the opening price. It's going to create the high price. It's going to create the low price. It's going to create the close price, which are 4 price points. Now we have previous candle high, which is 5. Previous candle open, which is 6. Previous candle low, which is 7. So now we have 7 price informations. 7 price informations. And we see these 7 price informations, we can now know what price wants to do. But for us to know what price wants to do, let me teach you something. Remember, I told you that equilibrium price is negotiating price. So whatever you want to do in this price, make sure whatever we're going to do means our entry must be at the opening price. So you see this previous opening price, this previous candle opening price, and this our new opening price. That is where we are looking for. That is where we are anticipating. So when market opens and it starts coming down, it might continue to go up from here. Let's imagine it's going to end up bullish. For this candle to be bullish, it will first open. That's a must. And then it must go, it can continue to go up from here. Remember, why will it continue to go up here? Because you see this sell move here. You see this sell move here? Sorry, guys. Let me delete that. You see this whole sell move here? That is the bidders quoting their price. And then price will just continue to go up, liquidity. But in most scenarios, it will not happen like that. And if it happen like that, there are things to do. You learn everything, don't worry. Now, typically a bullish candle will typically open, comes to the opening. Now, sometimes it can come a little bit, but the point is that we want to see our entry at the opening of this candle, around the opening of this candle, or this, you see this previous candle open? Yes. Once it comes there, we can assume that it is exhausted. And from there, it continues to go up. Now, when it start going up, where do we assume it wants to go? Remember that sellers still have liquidity that still needs to be matched. Yeah, exactly. So what do you think? So if you start going up from here, what do you think is going? It's going to match those liquidity. And where is it going? Clear that high. And then when it gets to, when it's moving off, it's closed for the day. Sometimes it closed above the previous day high, sometimes it closed below, it doesn't matter. See how we have used previous candle information to now understand what will happen in this candle. And then we rinse and we repeat. Previous candle high, previous candle low, previous candle open. In a bullish scenario, we anticipate it to come at least that opening price, around that opening price. Now, I will tell us what we will look at. Because what I'm just showing you is referencing time and price, but I will show us things. We're still going deeper. This is just textbook illustration. I'm not teaching yet. I'm just showing you textbook illustration. Okay? So price open comes into the opening of the previous day or below the opening of the present day. Sometimes it will not touch the opening of the previous day. It will just, once it is below the opening, it is cheap enough for sellers. Sometimes it could be here. It could be a little bit below the open. Sometimes it could be so much below the open. Sometimes it could be medium below the open. It doesn't matter. We don't know those ones. There are things we use to know them, but I'll teach you all. But the point is that as long as it's below present day low, then it is cheap enough. The moment it's below previous day open, I'm sorry, the moment it is below present day open, then it is cheap enough, right? Remember, bidders will always want to sell and buy at cheap price. So anything below the opening price, which is the equilibrium price, is cheap for them. So they can keep on opening for lower price, or when it's okay for them, they buy. Now, you see, when price gets to previous day open, it becomes extremely expensive. I'm sorry, extremely cheap. At that point, sellers don't even want to, so buyers must come in. Although it's not every time. There are sometimes they will not, which I will also show up to us. There are conditions. And then once this thing happens, price move up. Now, someone will say, Sir Max, why must it go up, up, up? Why did it not just stop here? Reason is because we still have sellers' orders that needs to be paid here. Range, and this is it, previous day levels. You use them to reference price. Now you see how everything is making sense. Now, a trend trader will tell you, oh, this is a sell trend, this is a bullish trend, this is a sell trend, this is a bullish trend. They will tell you this higher high, higher low, higher high, higher low. It's a lie. Man, some of you have learned a lot in this market. It is well, though. It is well. I mean, that's the thing about knowledge. You see how I was able to explain this thing? They will tell you it's higher, low, higher, high, higher, low, market structure. That, bro, well, at a point, I believed those things until MBM opened my eyes. See how we're able to narrate what's happening exactly, and we made our money. For those who trade market structure, they will say high, higher, low, higher, high, higher, low. So what are they expecting? Higher high, right? So they will be expecting price to create higher high and come down to create higher low. But for those of us who trade MBM, we know that that's rubbish. What is happening is sellers, doing that thing and then buyers buying it. This is where I'm going to stop today. Tomorrow, we continue from here. But before that, let's go into the market and let's see if what I've just explained to you is true. Okay, so let's go to let's go to the daily time frame. Which one am I going to use now? Okay, let me use this one. Let me use this particular day here. So let's reference this particular day. So let's start from let's reference it on the 5 minutes candle. Yes, it is. Now, you see, Tuesday 17th of December to Wednesday 18th of December. What's happening there? Price opened. You see how it went up a little bit. Sorry, guys. Let me show you. Let me show you that so that you'll not be confused. Look at it. It just went up a little bit. Open, went up, create just small price. And what happened? It started selling. And that was the highest price for that time frame that we're looking at. And even the low price. See how there was exactly. So when price open and it's just a little bit move, it might be cheap enough for these guys. And they start expense and they start selling and all. But for the sake of what I just taught you, let me use in fact, let me do a magic. Let me not use any time frame. Let me just randomly pick zones on the chart and then just use them because I just want to show you that time frame. Yeah. Yes, of course. You can pick time. It doesn't matter. It's still the same thing. It's time frame. Time frame is what you call it. Time frame is not what somebody told you. 4 hour to you might be 12 o'clock to 4 o'clock. For another person, it might be 1 o'clock to 5 o'clock. For another person, it might be 6 o'clock to 10 o'clock. You get what I'm saying? Okay. So price opened, sellers came in, gave us what we want. Buyers bought into that. When it got here, sellers bought sold into that thing. And the same thing continue on this time frame. The price opened, point of opening price, that is a negotiation price, equilibrium price. Seller started negotiating a lower price. And it got here, creating liquidity for buyers. Buyers got tired, you get, and buyers buyers started buying into those moves, started buying, and they bought up to that high. And when it got to this high, sellers did what? And buyers got exhausted. Then they want liquidity provided by them, sellers fell into it. And this is what creates what we know as structure. Buyers and bidders, askers, bidders, askers, bidders, askers, bidders, askers, bidders, askers, bidders, askers. You see, either in an uptrend or a downtrend, bidders and askers would always remain the same. There's no change, there's no difference. They don't switch position. So they will tell you lower high, higher low, higher high, higher low, higher high, higher low. But when price got here, it becomes higher low, lower high, lower low, lower high. No, those things are wrong. We don't use those things in MBM. Okay, trash them. That will be where I'm gonna be stopping for here today. Please make sure you do your own. Practice this thing because now, like I told you, this is the point where some of you will need to do so many practicals. All these things I've showed you, go to your charts, practice them, and we'll meet in the next class. Okay, do have a wonderful night rest, guys. Bye bye.